Welcome to Alpha Insights. I'm Kristen. Today we're unpacking that quick little market thesis you probably heard this week. Buy hardware, sell software, and what it means for the AI build-out. I'm joined by Ryan, an investment advisor who follows infrastructure and semiconductors closely. Ryan, great to have you.
Thanks for having me, Kristen. Happy to be here. And hey, listeners, remember if you have questions as we go, you can ask us at stockalpha.ai.
All right, so the real question here is, where is the market actually shifting value inside the AI stack?
Right. So the headline was dramatic, but the data backs up the idea. We saw a clear split. Companies tied to physical AI infrastructure were rallying, while a lot of software names have struggled year to date.
Give us a quick example so listeners can picture it.
Sure. So companies like Marvell and Intel were up about nearly 5% in a session. Corning was up about 3%. On the flip side, some big software names are down a lot this year. Salesforce down about 36%. Adobe down about 34%. And even CrowdStrike down about 16%.
Yeah, that's a good point. So why is hardware, especially this optical layer you keep talking about, getting the spotlight now?
I mean, when you look at the data, the AI data center build-out is bumping into real physical limits. At very high bandwidths, think 800 gigabits and beyond, copper wiring just can't handle the bandwidth and power density. The industry is moving to optical interconnects, and that shift is capital and engineering intensive. That's what's driving the re-rating.
And NVIDIA made that loud and clear with some big investments, right?
Exactly. Over roughly a month, NVIDIA announced 3 separate strategic commitments, each about $2 billion, into different parts of the optical and silicon ecosystem. One went to a laser and photonics supplier, another to a transceiver and optics company, and one to a custom silicon partner. That kind of capital flow sends a roadmap signal, not just a momentary trade.
Interesting. So let's walk through the actual companies people keep hearing about in this space, starting with the laser layer.
Sure. The company known for continuous wave lasers is now being viewed less like a niche component maker and more like a strategic supplier to hyperscalers. They reportedly have a backlog in optical circuit switches north of $400 million, and their guidance implied about 85% year-over-year growth in that segment. That kind of demand profile changes how the market prices them. Then there's the transceiver and optics volume player, about 25% market share last year, and fiscal revenue just under $6 billion, up roughly 23% year-over-year. Their data center business alone topped about $1.2 billion last quarter, growing about 34%. Analysts that cover the stock have called it a mainstream AI infrastructure name.
Right.
Applied Optoelectronics is the more volatile, high-growth story in the sector. They reported a record fourth quarter at about $134 million in revenue, up roughly 34% year-over-year. Full-year revenue last year was about $456 million, up about 83%. Management has guided a strong revenue range for the next quarter and suggested full-year revenue could top $1 billion. So it's a more concentrated and faster-growing piece of the market.
And then there's the company people often skip, the test and measurement firm. That feels like a hidden but important piece.
Exactly. The testing layer is the toll road of optical deployment. If you're moving to 800 gigabit or 1.6 terabit links, you can't deploy at scale without validating performance. That company builds the instruments people use to certify those links. It's architecture agnostic and required regardless of which optical vendor wins, which gives it a durable role in the ecosystem.
Okay, now I want to talk about something you said earlier. Silicon photonics integration. There's a small name you mentioned that most listeners probably haven't heard of. Tell us about that.
Honestly, I was a bit surprised by this one when I dug in. There's a small cap company focused on an optical interposer platform. The core idea is wafer scale assembly, integrating lasers, modulators, photodetectors, and drive electronics into a single module using standard semiconductor manufacturing steps. No manual alignment, no exotic bonding. That solves the integration bottleneck for co-packaged optics, the step when you move from electrical signals to light right at the switch.
So, put simply, they're building the synapse between the chip and the light?
Yes, that's a good metaphor. And it's more than theory. They've announced partnerships that accelerate prototype and production timelines. One collaboration with a well-known optoelectronics manufacturer targets prototypes through late next year and volume production in 2027. Foxconn's interconnect arm selected their optical engines for 800 gigabit and 1.6 terabit pluggable modules, which helps with manufacturing scale. There's also a joint project with a group working on thin-film lithium niobate modulators aimed at next-generation, multi-terabit engines. So the ecosystem is forming around that interposer approach. That said, timelines matter. A lot of these technologies are being engineered right now, with production targets in 2027 and beyond. So the market may be repricing parts of the chain that are already in revenue cycles, while other pieces are still development stage.
Interesting. So, what does this mean for someone who follows the market but doesn't want stock picks? What's the practical takeaway?
Analysts note a structural shift. Capital and technical constraints are moving where value accrues in the AI stack. The optical infrastructure layer is capital-intensive and capacity-limited, and that's why some hardware names are being repriced. Data suggests the industry is converging on co-packaged optics to improve bandwidth density and lower rack-level power by as much as 40%. That creates a multi-year investment and supplier qualification cycle for hyperscalers. But remember, this is for informational purposes only, not investment advice.
Got it. Short reactions. Interesting, surprising, and clearly a timeline to watch.
Exactly. The near-term story is the parts of the optical stack already producing revenue and signing deals. The longer-term story is the integration and co-packaged architectures that unlock higher density and lower power, and those have a later production curve.
All right, Ryan, let's wrap with 3 quick takeaways for listeners.
Sure. 1. The market is shifting capital toward physical AI infrastructure, especially optical networking, because copper won't scale for future bandwidth needs. 2. Certain optical and photonics companies already have material revenue and big customer relationships, so they are being re-rated by the market. 3. Silicon photonics integration, the interposer approach, is a choke point that several partnerships are racing to solve, with production timelines concentrated around 2027 and beyond. And again, for clarity, this is informational, not a recommendation.
Great! If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks so much, Ryan.
Thanks, Kristen. Always good to talk through the plumbing of the market. That's where the interesting moves often start. And listeners, remember to send your questions to stockalpha.ai.